Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. The Reserve Bank of India asks banks to declare their exposure to IL&FS in notes to accounts to prevent underreporting of bad loans. Two bidders submit final resolution plan to acquire JP Infratech. Adani Infrastructure and Developers pulls out of the race. That is a Bloomberg Quint exclusive. Bharti Infratel posts a surprise drop in profits as tenant exits hurt the tower company in Q4. And amongst numbers that will come out today, Axis Bank, Maruti Suzuki and Tata Steel are the three NIFTY companies reporting their quarterly numbers today. Well, let's take a look at the trade setup for the day. I think it was a mixed day of earnings for the US markets. AT&T and Caterpillar didn't quite post what was anticipated. The tech companies did reasonably okay as a result of that. It was all over the place, you would argue, for the US markets in the session. S&P 500 down about 0.25%, Dow about 0.25%, similarly for the NASDAQ. So no big dramatic movements in the US markets. Nothing led by earnings. Remember, we've been saying since the start of the week that it's a big week of earnings for the US markets, and they needed the earnings to take the SPX to record highs. That it did is just pull back a little bit from trade yesterday. And that's probably showing in the way the world markets are trading in the session today as well. These days, the Asian markets are a lot more correlated to the US markets. Not India, but the other Asian markets are a lot more correlated to what the US markets are doing. And therefore, you have a flattish to a mixed start across the Asian screen. In early morning trade, the SGX Nifty indicating a start which is flattish to marginally lower in trade. But this could be deceptive because yesterday nobody quite anticipated the kind of move that we would have gotten. We'll get to that in a bit. Just keep in mind, the only solace for a lot of Asian markets is that while the US markets are trading at life highs and select other markets are trading at life highs, a lot of other Asia Pacific markets in the region are substantially lower from their all-time high levels. So the argument across networks, I mean, when I hear interviews across the Bloomberg network about what people are talking about the other Asian markets selectively, a bunch of them are substantially off from their all-time highs, and therefore what might happen to the rest of the Asian screen is not necessarily what might happen to India. You just got to keep that at the back of your mind. Speaking of the Indian markets, I can tell you with assurance, nobody quite anticipated what happened in trade yesterday in the last 1 hour, 1.5 hours of trade. It was a smart, remarkable move. There were the late hour surge and fresh longs were seen on both the Nifty and the Nifty Bank. And now I was reading a couple of notes from traders of the derivative space. This band of 11,550 and 11,570 is acting as a very strong support, a bit of a sheet anchor for our markets because this is precisely the levels. These are precisely the levels at which the last expiry had ended on a high, and then we've taken off from there. In yesterday's session, around those levels is where we pulled back and pulled back quite handsomely. So maybe this is a sheet anchor for the markets. Not that we're likely to test that today, considering the start, but just watch out for that support. Strong move and fresh longs seen across bourses. There was buying seen in a bunch of in the markets at large and some of the oil-related companies, despite crude staying at elevated levels. So that was another thing. And if indeed Ambuja comes out with good numbers, that's the conditional move, then you might actually have an aid in the cement rally as well. And keep in mind, what yesterday's rally did is that usually you don't see a late surge in the large caps being accompanied by a sharp uptick in mid caps and small caps, but that happened as well. So if you look at the last 4 or 5 sessions or the last 7 sessions, the blue lines and the yellow line, which is the mid cap and the small cap indices, haven't done quite anything. But yesterday's surge led to an uptick in what the broader markets did as well. So they've staged a bit of a recovery too, and that will be important for sentiment. Flows turned to positive yet again, so 974 crores. We were talking about 2 days of a lull, a negative day as well yesterday, but 974 crores. So back to inflows from the FI community, at least on the equity side. Well, I think what will determine what the FIs do would also be earnings now. Today, tomorrow, and day after, thick of Nifty earnings coming out. In today's session too, 3 important names. They may not be really heavy weightages, say for Maruti, but 3 very important names, Axis Bank, and very important from a perspective of what corporate banks could do. Remember, the the street is banking on corporate-facing banks coming back very, very sharply on the profitability front. Axis will be testimony to that. There is Yes coming out later on this week as well, so important. But Axis today, very important. Maruti, extremely important. Whether they disappoint yet again, because that's the rumor in the market the last couple of days. We'll speak to Yatin about it in detail. But watch out, Maruti, extremely important set of numbers as well. And Tata Steel, again, what the metal company does, it will be watched out for with a lot of anticipation. So do watch out for these nifty names. Not too many important non-nifty names, but from an index perspective, it's a very interesting day of trade. However, all of that we'll get to know a bit later on. What we'll focus on at 9:15 are stocks that would or could react in the session. So Indiabulls Housing Finance and Bharti Infratel, the two companies on the index front, below estimate numbers, marginally below but below estimates. Let's wait and watch. Bharti Infratel could have a reaction in the session today. Mahindra & Mahindra Financial, it looked to be a very strong quarter. The NI up 26%. The net profit was up 87%, but that was also aided by an impairment gain of 114 crores. However, if you just look at in a nutshell what's happened to the earnings, there was improvement in asset quality which aided the earnings, and I think that is something that the street will take heart from. So maybe you could have a positive uptick in Mahindra & Mahindra Financial Services. ICICI Prudential Life Insurance, it was a mixed bag of numbers. The net premium income was up 16.2%. The profits fell about 23%. You could argue about whether the VNB margins met or left a bit to be desired. But the management was fairly confident about wanting to double the value of new business in the next 3 to 4 years. They were confident of the AP growth numbers, how they have come back and what they could look like in FY20. And therefore, I would suspect that there will not be a kill-off momentum that we've seen in ICICI Prudential. Certainly don't expect a day like a reaction the way it happened in the last quarter. So that's something that you can safely say about ICICI Prudential. And watch out for Ultratech as well, by the way. Brokerages have upgraded that stock. We talked about this yesterday. There was a sharp possibility of a BTST, ended the day's highs, and now brokerages have come out with the notes. Let's wait and watch what happens to this one. Just last one piece, very quickly, I just want to mention, it's not stock specific, but important from a banking perspective. RBI has asked banks to disclose the exposure to RNFS accounts separately. Banks have been asked to disclose the quantum of loans to RNFS classified as NPAs as well. And disclosures will have to be made separately in notes to accounts. This is important from a bank disclosure perspective. Let's wait and watch what the numbers turn out to be. However, amidst all of this, let's tell you what's lined up on First Word today. We start off with Telecom. The operators may be looking to clean up their books, but what's equally important is to be able to hike tariffs. Sumit tells us why. Nikki then lists out why Indian graphite electrode makers are having a rather tough time. Yatin and Johnson to tell us why analysts don't expect any fireworks from Maruti Suzuki, and consumer firms are having a tough time dealing with the GST anti-profiteering body. Nikunj tells us why. Vodafone Idea can breathe a sigh of relief. Literally, the 25,000 crore rights issue has been oversubscribed. The country's largest telecom operator is going to use the entire amount to reduce the debt. And Vodafone Idea is not the only one, by the way. Its peers have also remarked on a cleanup drive as the tariff war seems to be coming to an end. But will that be enough, even if that happens? Perhaps not. Sumit tells us why. Sumit, good morning.
Good morning, Neeraj. So I'll start off first with the deleveraging plans of all the telecom companies. Now, to start off with Vodafone Idea, now they have the rights issue of 25,000 crore, which is now oversubscribed. Along with that, the company is also looking to sell stake in its non-core assets, that is the tower and the fiber assets. Now, its stake in Indus Towers could fetch them close to 5,000 crore rupees, while it's 1,58,000 kilometers of fiber. Now, exact valuation of this fiber asset is not known, but according to the company, the replacement cost of 1 kilometer of fiber is close to 10 lakh rupees. And that could be the benchmark price. That's what the company told us. So given that 10 lakh rupees value, if you see, the fiber asset could fetch a value of close to 16,000 crore rupees. So that is close to 45,800 crore rupees for Vodafone Idea. Now, second on the list is Bharti Airtel. Now, they also have their rights issue and bond, which is the rights issue is close to 25,000 crore rupees, while the perpetual bond that they're going to raise is close to 7,000 crore rupees. So this fundraising is close to 32,000 crore rupees. Along with that, the company is also looking to sell its sell its non-core assets, and also it's planning to list its African unit. Now the listing of the African unit could fetch them close to 21,000 crore rupees because they hold close to 65%. Here a listing of that could get them a valuation of close to 21,000 crore rupees. Now on the non-core asset sale part, firstly they have the tower asset, that is their stake in Bharti Infratel. Now the value of that stake is close to 29,400 crore rupees. So that is another option that the company has. Along with that, they also have a DTH business which in which they hold close to 80% stake, which is valued at close to 9,000 crore rupees, while they also have a fiber asset of close to 2,73,000 kilometers, with the value of that is close to 28,000 crore rupees. So that is the another option that they have. So a total of close to 1,13,000 that they can raise. Lastly, we have Reliance Jio. Now already they have transferred their they have hived off their tower and fiber asset, which has resulted into a lower debt of close to 70,700 crore rupees, because this debt belonged to the tower and fiber, which moved to the InvIT books. So this debt has already come out of the books of Reliance Jio. Now the tower and fiber asset that they have hived off to the InvIT, they are valuing that asset at close to 2,03,000 crore rupees, and by selling stake in this InvIT, the Reliance Industry, that is the parent company of Reliance Jio, can further bring down their debt of massive debt of close to 2,72,000 crore rupees. So that's the another option that Reliance Industries has to bring down its debt. But now this deleveraging plan, all these deleveraging plan raises the main question that will this solve the financial issues that the sector has actually been saying? But actually it will not, because if you see, this move will only repair the existing damage and allow the companies to stay competitive in the market. Now to solve the financial issues, what the sector actually needs is a hike in tariffs. However, this hike in tariffs might still be some time away because the price setter has still not achieved its target. Now the pricing power in the 4G space lies with Reliance Jio, and we have no doubt with that, because we had seen the kind of disruption that the company had brought when they had brought in the lower tariffs. Now and if you see, Reliance Jio had an aspiration to control nearly half of the revenue generating telecom market, which is still not completed, and experts believe that till the time the company achieves this target, they're not going to increase tariffs. And given the fact that there has been strong subscriber growth, high churn seen in incumbent subscriber ratio, and the huge opportunity in the feature phone, experts still believe that the company will focus on subscriber growth and not on ARPU growth. And currently, if you see, Reliance Jio has close to 24% of the active subscriber base and 30% of the revenue market share in the telecom market. So it's the price hike is still time away, because if you see, they want to control nearly 50% of the revenue market share, and they're still at 30%. So still that till they get that 50% mark, there won't be any price hike and there won't be any relief. And this deleveraging plan will only help the telecom companies to repair the existing damage and to stay competitive in the market.
Okay. Sumit, thanks so much for putting that into perspective. Cleanup act for sure. Maybe not enough. Maybe tariffs need to rise. Let's wait and watch when do they happen, if that happens in the near term. As Sumit told us a few days back, Reliance Jio in its analyst meet has clearly stated that the tariffs are not coming up anytime soon. Okay, moving on to the next piece. Environmental clampdown in China and growing demand for graphite electrodes helped HEG and Graphite India climb to new highs last year. They were on a roll, but it's turned sour since then, with both losing nearly half their market value over the last 6 months. So has something fundamentally changed? Probably yes. Nikki's here with the answer. Go on, Nikki.
Good morning, Neeraj. We're looking at a 40% downtake in both Graphite India as well as HEG YTD basis. And if you look at from the highs that we've scaled from October, that's a 60% downtake for the stock. Clearly not a good show, but we'll understand what's going behind the correction of these stocks. The China factor is essentially playing out for Graphite India players. China is expected to add a 40% capacity, and that's going to be spread out in a span of around 2019 to 2020. The supply is expected to exceed the capacity and drive the exports thereon. The capacity hike is expected to put pressure on existing prices of graphite electrode, which will make the China GE market turn into surplus. And with that, we could also expect a 40% downtake or a fall further in graphite prices, clearly a factor which will not go down well with graphite players. If we are supposed to quantify the capacities that we see over a span of these 3 years, for 2019 we're expecting 465 kiloton coming in, 2020 will be 310 KT, and in 2021 we expected to see around 185 KT. How does that impact the Indian graphite producers as a whole, well, graphite, both HEG as well as Graphite India, they both are export oriented. HEG exports around 70% of their total products to international markets, to around 13 regions, and Graphite has around 37% of its revenue coming in from exports. So clearly, a downtick in the prices globally will also have a bearing on the earnings of Indian companies because they're export oriented there. And besides that, India has also removed the anti-dumping duty on graphite electrodes from China in September 2018, which means that any imports that will come into the country will also have a bearing on the graphite prices. If you look at the margin picture out there, margins have been moderating for the company. Look at Q2 FY19. We're looking at, for HEG as well as Graphite India, we've started contraction coming in. 76% goes to 70% for HEG. For Graphite India, from 69% of margins, that comes down lower to 56%. And FY19 estimated too, the margins are expected to moderate or rather correct further to 55 and 43% respectively as per Jefferies estimates. Why are we seeing this cost pressures? Typically because of the lower graphite prices, as I just mentioned, and also hike in the needle coke prices, essentially, which is the raw material used to produce graphite electrodes. Having said that, there are also kind of Iran sanctions on Indian exports of electrodes, which is the major market for Indian companies. That has also seen some amount of bearing on the earnings of the company. With that, we are expecting the margin pressure to continue, with GE prices edging low around 10 to 15%. And this pressure is expected to intensify, given that the Citi reports, as well as the Jefferies Macquarie reports, suggest that for graphite electrode prices in Q1 FY20, we're expecting a downtick of around 10 to 15%. And for the year as a whole, that's the calendar year 2019, we're expecting to see a 40% downtick from the current market prices.
Well, under pressure, certainly. Let's wait and watch for how long does this last. Nikki, thanks so much for putting that into perspective. The next piece on First Word, the country's largest car maker, will be the first from the auto industry to report earnings. The slowdown in demand is expected to reflect on its numbers. Yatin Johnson with the expectations. Yatin, good morning. The last couple of days, I think the murmurs on the street have been that it may not be able to meet what the street believed would be a beat. But what are the numbers? What is it that you are watching out for?
So, Neeraj, first of all, it was a tough quarter for the entire auto sector, starting with the festive season, which didn't work well. We had the inventory issues, because of which a lot of discounting happened in the marketplace, and probably the discounting and the promotion would be one figure that we'll be watching out for, because that will be one factor which will be impacting the margins. Of course, this time in the fourth quarter, we had Maruti's overall volumes, which fell by nearly 0.6 or 0.7%. If you talk about the Bloomberg poll, we are expecting revenues to be up only by 1% odd. We also are expecting a decline in both EBITDA as well as profitability on the back of lower volumes. EBITDA is seen falling by 11%, profits falling by nearly 14% is what the Bloomberg poll is throwing up. Margins also are expected to see a downtick of nearly 150 basis points to 200 basis points. The Bloomberg poll is throwing up a margin figure of 12.5% versus a level of 14.2%. Remember, last quarter the margins were around the 10% mark. So margins are something that we'll be watching out for any which ways, because it was a tough quarter. So margin figure would always matter. And finally, apart from the earnings, the management commentary on the demand scenario is something that we'll be watching out for, because last time when we spoke with the Maruti's management and the chairman R.C. Bhargav, we said that election years generally see weak demand, and then we can see some pickup once the elections are over. So probably let's see how really the management accesses and give detail with respect to demand, discounting, especially the rural markets, how they are shaping up.
So, Yatin, if volumes have fallen a little bit, how has the pricing scenario held up? Has there been discounting, as you mentioned, and therefore, will that have an impact on revenues? And part two of my question would be that if it was 10% margins, EBITDA margins in quarter 3, and the expectation is 12.5, if they manage to better that and come up with a number which is between 12.5 and 13, which would mean that they would beat the expectations and climb on a quarter-on-quarter basis in a meaningful way, will that be seen as a positive?
Obviously, Neeraj, margin performance is the only thing that will matter for Maruti, because typically auto company discloses the monthly numbers, so you have a breakup of what is getting sold, what are the realizations. So so as an analyst, you only forecast the operating margin. So that is important. I think 12.5% would be difficult for Maruti to achieve because the assumption here was that the discounting will go down quarter on quarter. That really didn't happen. Of course, we had select new launches on which discounts were not there. So the new Baleno did not have discounts. A lot of other models did not have discounts. Probably there would be some set off. But there were a lot of inventories lying with dealerships. We exactly don't know the breakup of the discounts which are there in the marketplace because a certain portion was also offered from the pockets of the dealers. These are the typical things that we'll be watching out for as to how much did Maruti really compensated dealers, how much dealers were putting out of the pocket expenses and discounts in order to promote sales, especially in the month of March, wherein there was a glut of inventory. And all of these things plus the operating leverage issue, because if you look at the compact car segment, we have seen decline there, very sharp decline. The operating leverage turns negative because the production was down this time for Maruti. So let's really see how does it shape up. How is the currency benefit passing through for Maruti in terms of the yen thing that they have. Last quarter they had some headwinds, tailwinds of raw materials as well as yen, which was expected to reverse some bit, and that will aid the margins to a certain extent, but by how much is difficult to talk.
So a lot of factors, but you yourself don't believe that the 12.5 might also be met?
It will be difficult to deliver a 12.5% margin in such market scenarios wherein steel prices also firmed up in the fag end. So let's see how the company is managing their costs as well as discounting.
Okay, so 12.5 is the Bloomberg poll. Yatin Mota believes that even that might be difficult to meet. So beating that estimate might be really, really difficult, and arguably that will be the most important number to watch out for from Maruti Suzuki's stable. Yatin, thanks so much for putting that into perspective. Watch out for this one. It's a big one, and it's also important because after a run-up that we saw in Maruti Suzuki the previous 2 weeks, this week it's been clobbered down. The 3-month chart kind of gives an indication that how April was a very good month until this week. The last 3 or 4 days have spoiled the party. Look at that chart. It went up all the way to 7,400, 7,500. The last 3 days have cooled off on expectations that maybe, just maybe, things might not be all that great. The last thing on First Word today, it's been nearly 2 years since GST came into effect. While consumer companies have finally come to terms with the new system, the tax authorities are going through past filings to pull up some of the companies for alleged profiteering, but not passing on the rate cuts. Nikunj Ohri has the details.
The GST investigation body is seeking to extend probe against Patanjali Ayurved Limited for not passing on the benefit of GST rate reduction to consumers. The DGAP, or Directorate General of Anti-Profiteering, in its report had alleged that Patanjali Ayurved Limited profiteered to the extent of 176 crore rupees by not passing on the benefit of GST cut to consumers. The period of investigation was until August 2018, which is likely going to be extended till March 2019. This comes after the National Anti-Profiteering Authority has asked DGAP to reopen this entire case, and after Patanjali officials complained NAA that DGAP had wrongly used duplicate invoices in its investigation to inflate the profiteered sum, which came to around 176 crore rupees. Now NAA has ordered reopening this entire case and has ordered DGAP to investigate the company again, and has at the same time extended the period of investigation. Besides this, another consumer goods major, Hindustan Unilever Limited, is staring at another investigation by GST authorities, but DGAP officials are awaiting a direction from Delhi High Court, since the company had moved Delhi High Court challenging NAA's order, which asked the company to deposit 462 crore rupees. So now DGAP officials will wait until a verdict is announced by the Delhi High Court, since the High Court in one of its hearing had said that no coercive action can be taken by any government authorities against HUL until and unless an order by the Delhi High Court is passed. Over to you.
Okay. And of course, you can read more about this conversation. There's a story file of this on the website. So do log on to bloombergquint.com, www.bloombergquint.com, in order to read more about this. That's all that we have on First Word today, though. Lots more lined up on Indian Open. We discuss what are life insurers CIOs doing. Mihir Vora of Max Life Insurance will be joining in to talk about that. Then we have a bunch of earnings conversations lined up. NS Kannan of ICICI Prudential Life Insurance to talk about how the quarter went by, as would be R. Sri Krishna of Hexaware Technologies after what was a rather disappointing quarter. And lastly, Vinod Panikkar of Muthoot Capital Services. The stock tanked about 8%. It'd be important to get a sense from them about what happened in the quarter gone by. But after this break, a full tilt towards the day's trade.